Joining us now is Martin Yang. He's a senior analyst over at Oppenheimer, along with our own Steve Kovach, who covers technology for CNBC. Martin, Steve, thank you very much for joining us here. Maybe, Steve, I will start with you to kind of take us through the, I guess, thesis for why we saw the kind of reversal that we did. It was a disappointing result, but it still seems as though traders and investors have this urge to want to buy Apple when it goes on sale like it did. What exactly were the fundamental parts of that story for Apple in its earnings report?
Yeah, for sure, Dom. So a couple of things here. On the guidance that Luca Maestri, the CFO of Apple, gave on the analyst call last night, he talked about, like, to your point, that most of the segments are going to be down. That includes Mac, that includes iPhone, and so forth. But iPhone's not going to be down as much as it was in the December quarter. So I think people are really glomming onto that data point, saying, OK, things are going to be bad, but not horrible. And also keep in mind, Dom, Apple, as demand collapses for consumer electronics, especially PCs, Apple actually outperformed a lot of its peers, gaining market share actually last quarter as everyone else struggled. That's according to IDC. On top of that, there's another positive story they're trying to tell around services. They talked about the install base of 2 billion active devices. That means that's every one of those people is an opportunity to sell more subscriptions, to sell more App Store sales, to sell and advertising within the iPhone. So there's optimism around that too. They, in fact, despite all these headwinds in services, Dom, they set a record revenue number. It's one of the only segments that they were able to beat on. So that's where some of this optimism is coming from, despite the first miss in almost 7 years.
Okay, so Martin, this is a fundamental story that you have to pour through. You've got a lot of models on your side of things, inputs that go into them. What exactly in this kind of generally disappointing report has not changed your mind? Why is it that you've seen some of the slowing growth that we've seen, yet you still maintain that bullish kind of longer-term outlook on Apple as a stock?
Yes, so out of the results, something you can quantify is really better than expected service revenues. And we have gone through almost a year where App Store revenue payout to developers has stalled, and that's largely due to the much lower transactions through mobile games. And yet Apple still delivered better than expected service results, driven by Apple's own services like iCloud, like Apple Play, like Apple Pay, and Apple TV. So there's largely a underlying story still gone. It is largely unnoticed by most investors, is that Apple is paying less attention or less emphasis on the app economy and instead pivot the service revenue growth towards its own first-party content and services. And that's something it will have very positive long-term effect, driving the margins, driving a more sustainable service revenues despite some of the regulatory pressures put on the App Store. And that's one quantified evidence you can see. The other are, still they are making record active install base on emerging markets. And that gave us more confidence on the longer-term durability of the hardware growth and the hardware install base. We continue to expect Apple to take share very, very consistently in the forward years.
So that's a good point, Martin. iPhone revenues, we always talk about iPhone as a segment that becomes the bulk, right, of the Apple results. We always have to focus on there. But to your point as well, services revenue has now jumped up the leaderboard, so to speak, to take over a pretty decent second place. Better than in terms of Mac sales, better than iPad sales, and Mac sales put together. That services component is now growing. But at 6.4% year over year in this first quarter for the company, does that represent a slowdown in your mind that should be worrisome from a valuation standpoint?
It's worrisome in the near term because it's still very much exposed to how consumers decide to spend with their apps. And particularly games. Gaming, by our estimates, accounts for well over 60% of the App Store revenues. So, and that's a kind of discretionary spending And when you go under pressure, seeing all the headlines that are worrisome, you will spend less on games and other in-app purchases. So that will continue to be headwinds into 2023. But again, if we stretch the timeline to maybe 3 to 5 years, that will be a much lesser impact comparing to the potential growth Apple could have with its own services.